So I'm here with Mike DelPrete, who's a leading residential real estate analyst and has been doing a lot of great work, I think, on this broader thesis that I've been obsessed with, which is the commoditization of the single family home. Can the single family home become a marketable, tradable asset like a barrel of oil or something like that? One of the companies to me, Mike, that really epitomizes this thesis is Opendoor, right? Largest iBuyer, you could say the pioneer of iBuying, which is algorithmically driven instant home buying. But it hasn't been smooth sailing for them. They've had consistent losses. And in the last quarter, I believe they lost just under $1 billion, $928 million. So yesterday, and the reason we're talking today is that Eric Wu, who's the co-founder and former CEO, stepped down, and the company is going to be run by Carrie Wheeler, who's the CFO. So I thought I'd connect with you, the best person, to just get a quick reaction, what this news could mean for the company. So let's start there.
Yeah, sure. And thanks for having me. It's nice to chat. I think what's attracted me, yes, Opendoor is the biggest iBuyer, but then we have iBuying within the context of real estate, right? And what attracted me to this business back in kind of 2015, 2016, when it was just starting out, was it was the only business really trying to redefine how real estate is transacted, right? At scale. This idea of iBuying was totally new. Opendoor invented it, this latest iteration. They were raising millions and millions of dollars and building this idea at scale that, compared to everybody else, was radically different, right? Everyone else was trying to digitize the process. Opendoor was coming to the party with a totally different way from point A to point B. Yeah, right? If you want to sell your home.
As you point out, from the 1700s, the process of buying and selling a home, with a few bells and whistles, has been pretty much the same until these years.
Yeah, and there's the traditional way, right? Where you put it on an open market, you get buyers, they come in and you transact. There's a lot of uncertainty and you don't know what it's going to sell for, how long it's going to take. But Opendoor came to the party with this totally new way to do it, right? Around speed, simplicity, and certainty. And kind of to your point, this idea of commoditizing a house. Can we treat it like a stock or a fixed asset where you just buy and sell with a click of a button? So that was a pretty radical departure.
Yeah.
But yeah, I mean, now the company's had definitely a difficult time. iBuying has had a difficult year, right?
Yeah.
I think iBuying was designed with recessions in mind and cooling housing markets in mind and buyers markets and sellers markets, all of that, like, no problem. But global pandemic, not so much. And what the effect that has had on the real estate market over the past 2 years has just been insanity. I mean, it is a roller coaster where the highs have never been higher and the lows have never been lower. And it turns out that
this mass just diffusion of the market, right? Like, your strongholds aren't necessarily your strongholds anymore. You're seeing submarkets that barely existed before are now hot, right? In a real way. So there's volatility that you couldn't really account for. And it's funny you mentioned design for a recession, because I saw a tweet from 2018 from Keith Raboy, co-founder of Opendoor. He had the original idea, and it said, like, LOL, we do better in a recession. That was the tweet. It hasn't really worked out yet.
Yeah, the word you use, the key phrase there is velocity, right? It's not that it's a recession or not. It's the velocity that the market has changed. That's what killed Zillow last year, and that's what punched Opendoor in the face this year. It's not that it went down, it's the velocity of it going down. Think about being on a roller coaster. Like, you can go up, you can go down, but if it just drops off a cliff, then you're in trouble. And that business model, when you have tens of thousands of homes in inventory, you don't really go off a cliff really well.
Right. And so where are we at now? The stock is, I believe it's below $2 a share. So they've brought in the CFO, and you're seeing this happen in a bunch of prop techs where they're bringing in the adult in the room. The bean counter is now taking over. So I wonder, like, what are your thoughts on Eric Wu? Because from the people I've spoken with, universally acknowledge this guy to be special, like a seriously dynamic founder, really big ideas. What's your take on his tenure?
I don't know Eric very well personally, so I don't want to comment on any of that. But I mean, the business, if you look at Opendoor since 2014, it's grown tremendously, right? If we're talking about activity in the billions of dollars. We're talking about homes in the tens, hundreds of thousands. You're talking about thousands of employees. So this business has gone from nothing to a very significant player in this space in a period of time. I don't know. It's not neither short nor long, right? It's been about kind of coming up on 10 years at this point since the company first came on the scene. So it's been quite a while. But yeah, I mean, obviously right now, a total struggle. So back to your first question in this news, I mean, it's a significant executive reshuffle. So pre this news, you had Eric as the CEO and another fellow named Andrew as the president. They're gone. They're out, right? I mean, that is the executive leadership of the business changed. And now, Carrie is coming in. And again, I don't know any of these people personally.
Yeah,
right?
but so just the background is private equity, CFO, very much dollars and cents as opposed to.
Yeah. So she's coming in as the CEO. Eric's taking a step back and moving to the side, whatever it is. They're still down a president. I mean, my understanding was Andrew, as president of Opendoor, was like he was the operations guy, right? Making everything work. So after you hear the news and you let it kind of percolate like I have overnight, you think, I don't know. I mean, on one hand, this is Eric kind of waking up and saying, all right, I'm done. I want to focus on something else. On the other hand, it's pretty easy to believe it's a company in crisis, right? Stock price is down some god awful percent, 90% over the past year.
I believe just to put this in perspective for the viewers, I think when they debuted they went public through a SPAC. It was valued at about 18 billion. Then when I checked yesterday, right after the news, it was 1.18 billion. Yeah. So that's not even a roller coaster. That's just a death jump, right?
It is. And to be fair, the whole market is down, right? The counterpoint here is, yeah, but tech company stocks are down and the whole market's down. And like, that is, yes, that's true, but is kind of leading the pack in terms of how much the stock is down. If you look at these companies that SPAC'd over the past 12 months, in real estate, it's the iBuyers in particular, Opendoor and OfferPad. I mean, they've been hammered more than anything else. Yeah. So you can pretty easily imagine a scenario where Opendoor's investors, and perhaps more importantly, their creditors, right? The people loaning them billions of dollars, have simply lost confidence in the business.
And you bring up a good point about creditors. One of the things they did pioneer was interesting capital structures to go and purchase homes. They did a lot of revolving credit facilities, and they were able to get money from 4 or 5 different places that no other big residential real estate players had really thought about. So they brought in some of that. I wonder what the temperature is like in those rooms now. We talked briefly about iBuying in general being at a sort of a pivotal point. Zillow, when they exited the market in about a year ago, actually, it was 900 million in losses that they said, all right, this was an experiment. We lost close to $1 billion. We're out. Redfin, about a month ago, I believe, did the same. I'm not sure if their losses, but then Opendoor was the only game in town. And there was some thought that, okay, these guys were kind of bespoke iBuyers as opposed to the others that layered iBuying into what they normally do. So they thought Opendoor would have a better shot at making it through. Where were you on that stuff? And you write a lot of interesting notes and newsletters about the iBuying industry. So I want to get your take on that.
Yeah, I mean, I think it's easy to say Opendoor was the best position of the iBuyers because there's only 2, Opendoor and OfferPad. So it's you can't really make a fair comparison. But the operational excellence and the fact they've done this for so long, this is the one thing they do. They have the technology, they have capital, all of that kind of goes in to say, if anyone's going to make it work, it's going to be them. And I mean, we can't say it hasn't worked. Yeah. Right. All we can do is just look at the data, look at the evidence. You can look at the losses, and you can say, has it worked from a profitability or a financial standpoint? Right. And it's clear where it's at right now. The other thing was this idea of around the whole transaction, right? Yes. We're going to be doing this buying and selling homes. We're also going to attach mortgage and title and escrow and all these adjacent services. Opendoor just shut down its entire mortgage operation last month when they laid everyone off. So you look at that and you're like, wow, there's some significant pivoting going on at that business.
Right. And I believe it was I think it was something you put out, but you were looking at the attach rate and the contribution margin for each service, right? That was you? I think you're the only guy who does
Sounds
sometimes.
like me. Sounds like me.
So I think you had pointed out that, on buying and selling a transaction, they might make that much money, but then the real juice, the real profit, as per them, is in X, Y, and Z. And if they're gutting X, Y, and Z, I don't know where do you think they make money? Like, if you're Opendoor, you're Carrie Wheeler today, are you just trying to survive this period and then move on, or what are you thinking?
Well, yeah, I think it is survive this period and move on. I mean, when we take a step back from the kind of the short-term crises that companies like Opendoor have faced over the past 2 years since the pandemic started, right? Pandemic started, and then all the iBuyers shut down, right? That was the crisis of 2020. There's all these short-term crises, but if we just kind of ignore that for a second and say, okay, those are all solved, we're in a normal market for a moment, you still go back to where we were in 2019, which was there was no credible path to profitability. Right? Like that, we still have that. Even if we solve all of these immediate problems right now, what is the path to profitability? It was getting to scale, it was adjacent services, it was improving unit economics. I think it's fair to say those really haven't panned out yet, or we can't really point out to say like, oh yeah, here's clear evidence that those are going to work and the company can operate at a scale profitably, right? They were profitable last year in a crazy HPA market where home prices were just going nuts. Like, yeah, surprise, surprise, but that's not normal. So what does normal look like, and what, yeah, can they achieve any semblance, anything close to profitability in a normal market? We've yet to see it.
And then the big question then becomes investor patience. I guess that would be the next big question, is how long can they stomach such losses before the investors say, right? That's where we'd be at. Yeah.
And that's what's great about capitalism in the public markets, is you have the wisdom of crowds to kind of give us a quantifiable answer to that question.
Yeah.
And that's the stock price. So that, stock price is a great correlation to potential of a business looking into the future.
Right.
And if you're measuring Opendoor just on its stock price, yeah, investors have run out of patience and they're pretty pessimistic on the future of the business.
And I guess the closest parallel would be Uber, massive scaled platform ambitions, loss making consistently. Investors seem to have given them a fair bit of rope, but I guess it's a little bit easier. That's a marketplace for drivers and passengers. That's why it's interesting that Eric Wu did not step down as such. He stepped down as CEO, but he's going to go work on what you described as this other thing. So I guess it really depends how far this other thing goes.
Yeah, the other thing is marketplace.
Right.
When I was just looking at this earlier, guys over at Datador track this data, and as of kind of right now, the marketplace, there's 34 listings on it, Opendoor listings, and then 5 third-party listings. So this is a baby, right? Yeah. This is really, really small.
Yeah.
And I think, I'm not going to get into it now. I had a webinar kind of a couple of weeks ago, and I'll probably publish something on Opendoor's exclusive marketplace at some point in the future. But I think the jury's still out, and really, really early in terms of what that can do for the company. It makes sense from a narrative standpoint to say this is the future. It's always the plan. We're going to get into the marketplace because it's this asset-light product. But when you hear somebody describe it, and to be fair, it usually takes a while to describe it. When you hear somebody describe it, it just sounds a lot like the traditional process.
Yeah,
right? It's not the speed, simplicity. Yeah.
Yeah, I was reading the Ben Thompson interview, and there is a lot of holes still, and Ben's one of the best at it, and I didn't even think that he quite got at exactly what it is. I want to switch for a second. We've talked a lot about investor interest, the capital markets around Opendoor, et cetera. Let's get to the emotional stuff related to Opendoor and real estate agents. Now, what the fear was, and there was a lot of trepidation around in the real estate industry around Opendoor, which is it would be what Expedia was for travel agents. It would sort of render them obsolete. And I know you've talked about this. I watched your keynote about it. There's probably a little bit of like chest thumping, victory laps happening right now in the agent community.
There certainly is. I don't really keep my plugged into that, so I couldn't tell you, but I'm sure there are. I'm sure there's agents that are like, I told you so, this would never work. I called this back in 2017, 2018. It's really disappointing. I mean, I think it's nice. On the one hand, it's great to see innovation and disruption in the space. And just because something has always been done a certain way doesn't mean it should always be done that certain way. Like let's try to constantly improve and do so in a way that's good for consumers and whatnot. So celebrating the failure of any company in this space, I think that's a little, that's a low blow, right? But we should acknowledge it. Like you can't go to the other side here. I mean, it gets very much into some of this dystopian literature and stuff where we're kind of rewriting the past and talking about what's going on. Like you also can't just believe all the hype and the press releases from these companies. Like we just need somebody to have an honest voice. And that's, kind of what I try to do about this is what's actually happening. This isn't all great and everything's going according to plan. It's also not the end of the world, but it's something in the middle. And yeah, these new models are struggling.
That's a really great point. The problem is the media also kind of gets caught up in every time there's a new investor round. It's exciting, it's newsy. You can't help but get into that mix. So it's quite hard. And we have to keep that in mind all the time. Like this is spin and that spin as well, and try to figure out what the real stuff is in the middle. So yeah, I think we, had the heads of Corcoran and the agency and stuff on a panel last month, and I brought up that was right after Redfin pulled the plug on their program, and they said, look, trusted advisor, that's the only way to go. So let's end with this. How far do you think this commoditization of the home can go? Like what other models are working or have promise or seem like they could be something if they figure out the kinks or get money? I'm interested in just like, let's say we're 5 years from now. Hopefully the freaking home buying process does not look like it does today. That would be a fucking shame, right? So where else can we go?
Well, I mean, what do you need to do to commoditize something, right? To commoditize something, there needs to be low differentiation, right? The products are all the same. The price point is low. You're kind of pushing to the lowest common denominator on things. So it simply is a commodity at that point, right? If all the options are the same, I'm just going to choose the lowest price option. I can't answer the question to say this is how far we can go in housing, but what I can offer is that out of any industry or asset class, real estate, houses, must be the hardest to commoditize simply because they are not commodities, right? Every piece of real estate is different by definition. Real estate is real land. My house is unique. This is the only house on this piece of land. It is unique. It is different from the house next door and the house next door. It's also worth a lot of money. Real estate is the largest transaction a consumer will undertake in their lifetime. Mm-hmm. How do you commoditize that? So you've got unique and super high price point. Out of everything in the world, that's got to be like the hardest thing to commoditize out there. So I'd kind of put that last on my list of industries that are going to get disrupted really quick with technology and all this stuff. And the evidence proves it. I mean, there's more people using agents now than ever before. We've had billions of dollars come into this industry, technology, disruption. We're going to do this, we're going to do that. But it turns out that the gravitational field of the traditional industry and agents and expert advisors is really strong. It's really hard to break away from that. So the evidence kind of shows that, yeah, this might be a really tough nut to crack. Right. And like I said, out of anything, it's probably going to be the last or the slowest industry to move in that direction. But I mean, not all industries should be commoditized.
Does, right? I guess the reason people keep coming back to it is when it does, those rewards are going to dwarf everything you might have seen in other industries that have been commoditized, right? That's the argument that people are making, I guess.
And there's a big assumption there that you said when it does,
right?
Like if it does.
Yeah.
I don't know. I mean, we don't, as a society, is everything moving towards commodity and technology and do everything with a click of a button? I don't know. I mean, I was listening to somebody the other day talk about photography. I mean, everybody has a camera on their phone, right? But this isn't it. You still have photography stores and you still have cameras and people are still like totally into that, right?
So, but that's a different, like, that's actually a good thing to bring up. yes, people are into all of that, but now that is a niche product, and this is your primary way of taking photos, right? I don't think any
Yeah.
of the iBuyers or any of the power buyer, whoever, are saying that your West Palm Beach mega mansion with a helipad is going away. If anything, what we've seen in Miami, those are just coming back like crazy. But I think it's like, if you could take care of the middle, that pie is so freaking massive that it's worth it for us.
Yeah. We'll have to see. It's too early to say, but right now the evidence is clear that the traditional model is vast majority, and these new models haven't really dented it in terms of market share. I mean, Opendoor, last year 1.3% market share, like that's huge. That's really big business. Um, but it is what it is, right? I mean, that's a company that has billions of dollars going out there buying up houses. It's straightforward to get to that market share if you have a lot of capital and a lot of reach. But in terms of like a winning business model that's going to succeed, make money, that consumers are going to use outside of a niche offering, that's a bit trickier.
Any other models? So we talked about iBuying and your broader doubts about that model. Any other models that you think are interesting that you're tracking and have some legs in your opinion?
I mean, power buyers, certainly. I mean, any new model that's just trying to innovate how people buy and sell homes. And usually it's innovate from a financial perspective more than anything else, right? Like if I gave you $1 billion, what do you do with it? Well, you could pull an Opendoor and just buy houses from people. That's cool. You could pull a Compass and kind of acquire agents and brokerages and build market share. All right, that's cool too. Power buyers, you could let people buy homes with your money so they don't have to worry about getting pre-approved in a certain amount of time, no contingencies. Well, that's pretty cool too. I think what we're going to see now, I mean, it's all about home affordability, right?
Mm.
Prices are just crazy. And with rising interest rates, people can't afford it. So I'm keeping an eye on solutions that are trying to address the affordability issue. And I think that's where we're going to get some interesting innovation over the next 12 to 18 months.
And we'll keep an eye on your work. Mike DelPrete, thank you so much.
Yeah, thanks. My pleasure.